Okay, so we have a great panel today. My name is Mindy. I'm going to let everybody go down the line and kind of introduce themselves and where they work and what they do, and then we'll kick it off from there. Go ahead, Bobby.
Hi, everybody. Thanks for coming. I'm Bobby Zagotta. I'm the CEO for Bitstamp USA and also the Chief Commercial Officer for the company globally. I've been with Bitstamp almost 4 years. Before this, I was Chief Commercial Officer at Kraken for 3 years, and before that, I was at CME Group on the traditional side.
I'm Aaron Jacob. It's great to see you all here. I'm the VP of Enterprise Accounting at Taxbit. We build software to support enterprises and governments that are managing the challenges of digital asset compliance. So I've been at Taxbit about to hit my 4 year in just a couple of weeks here. Prior to that, I spent a decade in traditional financial markets. I'm a CPA, previously worked at the FASB, which is the U.S. standard setting body for public and private companies.
Pleasure to be here, everyone. Thank you to the BitGo team for inviting me to participate on this panel. My name is Patrick Lowry. I'm the CEO of Samara Asset Group. We are a publicly traded holding company based out of Malta, albeit listed in Germany. We have, like everyone else here, Bitcoin on our balance sheet, and we're largely focused on making investments in limited partnership stakes in our fund complex. End of last year, we raised $21 million in a Bitcoin bond that we deployed directly into Bitcoin as well as into various funds over the last couple of months.
Awesome. Yeah, thanks everybody for being here. My name is Graham Krizek. I'm founder and CEO of Voltage. Voltage is a infrastructure payments company for the Bitcoin stack. So we focus on the Lightning Network and helping companies integrate Lightning into their products and services to enable Bitcoin and then also stable coins as they come onto Bitcoin for being able to facilitate the transactions on top of Bitcoin and do it faster and cheaper on top of Lightning.
Great, thank you. Okay, so my first question for everybody is actually an audience too. Who's actually paid for something in Bitcoin? What have you paid for? If it's, keep it, yeah.
So back in Berlin, and unfortunately the restaurant's no longer with us, but back in Berlin we had a Bitcoin bar, we called it Room 77. This was back in, let's say, 2015, 2016, when I was first getting into the Bitcoin and the crypto space. And you could actually pay for your beer there with Bitcoin. So I bought a round of beer for my friends, and wonderful thing about Germany is beer is cheaper than water in this country. It's incredible. So spent, I think, $9 on 3 beers for my friends and probably like $30-some in transaction fees on the network back then, which, okay, fine, whatever. It was 3x the cost of spending money on the beer, but I got to say, back in 2015, I legitimately used Bitcoin for purchases. I still currently do that today. So for instance, I had the distinct pleasure of meeting a couple of veterans at my golf tournament, the Samara Bitcoin Golf Championship on Monday. And I use River Financial to basically try to onboard as many people to Bitcoin as possible, because I think it is, in the United States, the absolute best way for people to get exposure to Bitcoin. You can send Bitcoin via text messages with River Financial. So I was able to make a donation to them in Bitcoin in real time on Memorial Day using River and the Bitcoin link. So it's incredible to see that Bitcoin payments are genuinely becoming a thing nowadays.
Yeah, it's pretty amazing.
I bought lunch with Bitcoin yesterday in the marketplace over here. So I do that. I try to kind of intentionally spend Bitcoin because that's kind of part of the Bitcoin was originally created as a form of payment. Obviously the store value aspect is very, very important as well. But I try and do that as much as I can. And with it's great to see how far we've come from the $30 transaction fee and doing it now. When most of these transactions, like when I bought lunch yesterday, was on Lightning, which reduces that fee from $30 to 0 cents or 1 cent or something incredibly small. And so the technology has evolved so much that we're able to actually use it as a method of payment and do it in a sensible way and not have to do it where you're doubling the value of what you're transferring with the transaction fee.
Yeah, that's awesome. I mean, yeah, there's been no shortage of news lately, that's for sure, right? Of like new companies coming up with accepting Bitcoin payments and things like that. Steak and Shake, the store here at the conference, right? Square saying that they're going to allow their merchants to accept Bitcoin as payments now. But I guess to the point about the transaction fees, though, right, and how Lightning helps kind of reduce all that, can you go into that a little bit more? Because that feels like a major barrier sometimes, right, to scale and adoption here. So maybe talk about like the Lightning Network and how that's helping and kind of like where we've come in terms of that aspect.
I'll start, then we can get more opinions. The way that you transact on Bitcoin in the base layer, you have to pay a miner fee to get your transaction confirmed into the block as just part of the way that the protocol works. That generally can be expensive. We got pretty low fees right now, but that can spike to really expensive. And so you're always have to be paying for your block space that you use. With Lightning, it's a layer 2 solution on top of Bitcoin. It's made for cheaper, faster payments. And what you do is you create a single payment channel with someone that you're going to transact with. That's a single on-chain transaction. And then you can send and receive payments between you and your counterparties for infinite amounts of times with this single on-chain transaction. So then inside of Lightning, your transactions can be zero if you're just transacting directly to a person, or you can route through others, and there's maybe some fees involved. But generally speaking, you can use this one on-chain payment to facilitate millions of additional payments on top, where you don't have to pay a fee for that at all. When you're done with that channel, maybe you've used it for a year and you want to, kind of settle up, you can just close it back into the main chain, and then you've done basically a million payments inside of Lightning with only, 1 to 2 on-chain payments. So it makes it much more scalable and actually using it for a method of payment.
Yeah, well, it's quite revolutionary, right? And inevitable, I think, that Bitcoin, which was founded on the principle of trust or trustless trust, is going to have to become more utility than just store of value. And Lightning, maybe not the only method, but the primary method to make that absolutely fast and seamless and cheap. So I think that our ecosystem or our industry in general are still, even today, underestimating the importance of Lightning and fully integrating it.
Yeah, and I think that's one, there's a million different ideas for scaling Bitcoin or any other chain for that matter. But that's one of the great things about Lightning is it maintains the properties of Bitcoin itself, of the decentralized nature, the ability of, unilaterally exiting, basically controlling your funds at all times. And so that's the only one that really kind of maintains those properties. And so it's a very big deal. And I agree. I think people are kind of underestimating what is possible inside of Lightning. And we've seen quite a bit of announcements this week with the Cash App doing more statistics on kind of how their Lightning adoption is going. I think 25% of Bitcoin movement on Cash App is over Lightning now, which is pretty substantial. It's been steadily growing over time. So I think that's really been good to see.
I think what comes to mind, I guess, too, when we keep thinking about additional points of friction, maybe for scale and adoption, is as a consumer, as I'm spending my Bitcoin, what do I have to think about, right, when these transactions occur? And this question might be good for you, from a tax perspective, right? What happens when I do spend my Bitcoin, and what happens in April? What am I going to see?
So I did not raise my hand and said I've spent my Bitcoin. A, because I'm a long-term holder.
Okay.
And B, because I'm also a CPA. And I realize that anytime I spend that Bitcoin, all of a sudden I've got this taxable event, I got to track these things, and it's a little bit of a pain in the neck. So maybe to just take a step back, Bitcoin, along with any cryptocurrency, is not currency in the eyes of the IRS in the U.S. and other government agencies, revenue agencies across the globe. It's really property. So when you have property, you acquire property, you have to track your cost basis in that property. What did I pay to acquire this property? And then when you subsequently dispose of that property, you have to identify what is the fair value of the property at the point of disposition, and what was my realized gain or loss, i.e. the difference between my original cost basis and the fair value when I dispose of the property. And then I have to report that for tax purposes. So when we think about how do you scale payments when it's tied to digital assets, Bitcoin, the technology is quickly evolving, and the stat that you just shared is phenomenal, 25%. The technology is quickly evolving, but the regulations, they still have some evolving to do in order to make it scalable, in order to make it easier to deal with. The technology that people use to do that tracking, to do the gain loss calculations. That is evolving as well. Taxbit has kind of led the charge in that realm. But I think it's fascinating when you think about companies in the past. There are actually a lot of companies who have accepted, or at least have stated that they accept Bitcoin as a means of payment for a long time. You go back to Tesla years ago, they accepted it, and then they stopped. And I always had this thesis, well, why did they stop? I think it had more to do with the operational complexities than anything else. Because if I'm accepting Bitcoin as a means of payment, I have to have a mechanism, a tool in place to track all of those mini acquisitions, which is essentially what it is when you accept Bitcoin as a means of payment. I've got to have a mechanism to track the acquisitions, to track the cost basis associated with each of those acquisitions in perpetuity. And then, depending on what I do, what my treasury strategy may be, for do I hold or do I not hold, do I dispose of those holdings, I need to have accounting mechanisms and tax mechanisms in place to be able to identify what was the cost basis, what was sold, what lot was sold, what was it acquired at, and what's the resulting gain or loss. So it gets very complicated. And if I'm, Tesla, and I'm accepting and then I'm disposing of, or people return a vehicle, I've got to manage all of this stuff, and there just weren't systems in place to do that for them. So Taxbit was born to be an enabler in the industry so that companies could accept Bitcoin, could accept digital assets, could adopt this exciting technology and not have to worry about the mess that compliance leaves, people holding. So it's a really fascinating question, and there today are good answers for it, thankfully.
Yeah, it's nice to see that we've come along, I guess. I'm sorry, were you going to add to that?
Well, I was going to say, you can also just lose your Bitcoin in a horrible boating accident.
Please no.
I think that's also why we see one of the reasons why stablecoins are so prevalent now is just it's dollar based, amongst a lot of the other values. But I think that's something that we've seen recently with there's a new protocol called taproot assets which enables asset issuance on top of Bitcoin and Lightning, and we see Tether is announcing support for that too. And so I think it'll be I think the Bitcoin stack for payments isn't always going to be just Bitcoin. I think we're very very quickly coming into stablecoins coming onto Bitcoin. And I think stablecoins on the layer 1 of Bitcoin don't exactly make a lot of sense because of the transaction fee issues that we've mentioned earlier. But when you bring stablecoins onto Lightning, which is you can settle a international payment half of a second for no fees at all, that's pretty great. Even when you compare that to a Solana or something, the ultimate settlement time of Solana for reorg assurance is far longer than that. So I think when we think about the long-term payment stack on top of Bitcoin, it's not only going to be just Bitcoin.
I'll say one other thing with stablecoins. I'm really excited to see that continue to happen more and more. And it's another good example, frankly, of where regulation needs to catch up with technology. And thankfully, there are 2 stablecoin bills right now making their way through Congress. I would be surprised if they don't pass, or one of them does not pass by the end of the year. But it's interesting, even for stablecoins, in their name, stable. The intent is that they are stable. They don't have the same level of volatility. They still trade in the market. And yes, there might be a smaller standard deviation that they trade within, but they still trade in the market. And just 2-ish years ago, when SVB experienced their magnificent fiasco, the world kind of woke up to not all stable coins, are stable, even if they're asset-backed or even over-collateralized, where you had USDC depeg to about 88 cents on the dollar. So all of a sudden you had corporate treasurers saying, I hold this stuff on my balance sheet, or I'm thinking about holding this stuff on my balance sheet, and auditors saying, is it really valued at a 1-for-1 peg? Is that a fair assumption to make? And a lot of people have said, well, it may not be because we have this black swan event, so you need to track it more carefully now. And because it is not legal tender, the same tax rules apply, unfortunately. So this is where I think regulation needs to catch up, and you need to have these stablecoin bills make their way fully and become law to provide some guidance around that so that more of that can happen, and it moves from 25% to beyond that.
So, I mean, the regulatory and the political side of this is seemingly getting solved, and thank God we have a new administration that is really trying to push these things forward, because exactly to your credit, that is something that seemingly is coming through. But I think the real issue of why we're not necessarily seeing Bitcoin or even stablecoin payment adoptions is twofold. Number one, most Bitcoiners, I think, would say that they would love to spend their Bitcoin, but the assumption is that the Bitcoin has to come back to them. And this is the concept of the Bitcoin circular economy, which we just don't have yet, right? So yes, I've done nuanced one-off payments in Bitcoin here or there, but am I going to go out and actually use Bitcoin for day-to-day transacting today? Absolutely not, because I know what the value proposition of Bitcoin is over the longer term, and until I get my salary, until I get my everything back in Bitcoin, until all goods and services I provide as a company come back to me in Bitcoin as well, there's not really much incentive for me to use Bitcoin, because I'm just hemorrhaging money. The opportunity cost of using that Bitcoin as a payment relative to just hodling the Bitcoin is enormous. So until we have that Bitcoin circular economy, which a lot of registration has to pass, a lot of taxation bills have to pass, I don't think we're necessarily going to see Bitcoin become a payment standard. The second piece of this is we don't have good UX in Bitcoin or crypto at all. It's atrocious. Now, of course, I sent a donation in Bitcoin via text message the other day, but still I had to have the guy download the link. He had to go on to River app. He had to go through a 10-minute process of KYC. It was annoying, and he was happy to receive the donation, but the UX, even for a great platform like River, is still very detrimental. And this is where I think we're not necessarily going to see Bitcoin Core or Bitcoin itself become adopted as a full-on payment layer, because the UX for Bitcoin itself is always probably going to be relatively horrible. But the truth is, the UX for SEPA, the UX for SWIFT, also is pretty horrible as well. But retail users and individuals, they don't give a shit if they're on their TD Bank app, they don't know what protocol they're engaging with. They don't care that the app is coded in TCP/IP, HTTPS, iOS, Android. They don't care. They don't care if the $1,000 that they're sending to their husbands or their wives, or, I don't know, giving their kids a little bit of money for spending on the weekend. They don't care that the SWIFT system is effectively the back-end protocol of how that money is moving through the banking system. The only thing they care about is they open up their app, they put in a little bit of things, say, send $10 to Timmy, and guess what? Timmy gets $10 that he can go and buy a beer with, right? Bitcoin needs to get to that, where people are interacting and engaging with Bitcoin, and Bitcoin is just the protocol on the back end through which value is transacting. And until we see that happen, I don't think we're necessarily going to see Bitcoin get adoption from a payment perspective. And obviously, legislation and all this other stuff has to happen, but for me, those are the two most important things that we have to overcome. We're not going to see it.
Well, what do you think will drive that push to get us to that point where the UX becomes something where, like, my grandma could do it and she can send me something?
UX. It all comes down to having seamless apps that integrate into our daily lives the same way that they do currently on our phone, and Bitcoin becomes the back-end protocol, the back-end ledger system upon which that global financial transactions can occur. So when Bitcoin reaches mass adoption when people are engaging with Bitcoin and they have no idea that Bitcoin's the back end of it.
I mean, it seems like a hard problem to solve, though. I'm from an outsider. I'm just saying.
Someone infinitely smarter than I is going to have to solve it. Somebody that has experience creating these types of systems. But that's where you have Jack Mahler's over at Stripe. They're working on projects like this. You have PayPal that is now offering, well, it's really more Bitcoin IOUs. It's not real Bitcoin, but they still have the ability to process Bitcoin payments. You're going to see a lot of companies that are going to come out with these types of applications that will use and leverage Bitcoin on the back end and allow for dollar transactions, stablecoin transactions on Bitcoin. But it's not going to be, they don't even have to know that they're engaging with Bitcoin.
Bobby, I think you have a good front seat into, like, demand. I guess that, right? Like, what people are kind of doing, what they're looking for from, what do you see, I guess, from your point of view?
Yeah, there's, so, as an exchange operator, we are interacting with institutions and with retail investors and traders, and there's the macro theses. Thesi. The macro factors haven't changed. Still even today, moving money from one place to another is too difficult, too expensive, too slow, and so the whole crypto promise here, is going to solve these things. The role the exchanges play quite often is enabling people to get in and out easily of whatever currency, from crypto to fiat or from crypto to crypto or what have you. But what's interesting to me is that when you think about Bitcoin as a payments thing, there's all these challenges we're talking about, including the biggest one, which is that people don't want to spend it; they want to hold it because the value opportunity is so great right now. So what would change that, I think, is an interesting question, and I don't know the answer, but as I started my comments, Bitcoin is arguably, someday will be the only currency of trust, that people can really trust. I hope that it doesn't happen tomorrow because it could represent a lot of chaos in the world. But I think when that happens, or if that happens, that's when everybody now is motivated to engage in the way that Patrick's talking about and to become very, utility oriented with it in addition to, managing value. And so that's the kind of hard question for me is, do we want that to happen? Or do stablecoins play the interim role here that is smarter and better? So there's a lot that I'm thinking about, at least. Wish I had answers for you guys, but these are just interesting questions.
No, I think that's a great point, and I think it's also really interesting because when you think about like payments inside of Bitcoin, like that can mean a lot. Like payments that's very general. Like there's so many different payments. Like going in and out of an exchange, making a payment to deposit funds into an exchange can still be, that's popular today. People do that all the time, and they can still, they use Bitcoin for that, a lot. And so like, that from a method of payment is, obviously very, very there, like in our faces. But then buying coffee at Starbucks is like, that retail, commerce transaction is the challenge where people are like, not wanting to necessarily part with their Bitcoin. And I think that's something that will be, very interesting, kind of going back to like stablecoins on Bitcoin with like the Taproot Assets protocol. You can have the swap between a stablecoin and Bitcoin is very seamless as part of the protocol. So you could generate like an invoice for someone to pay that is denominated in USDT or anything, and then you can receive Bitcoin as just part of it. So I think that will be interesting, where maybe people are you can the person sending is using USDT or some stablecoin, and then the person receiving is getting Bitcoin because they want to ultimately save in that or something like that, ignoring all the taxes and all those the fun stuff of it. But I think that will pose a really interesting mix where you can have like that store of value that people like to hold on to, which is Bitcoin, but then also have like that day-to-day your spending side, using something like a stable coin, but have all like a very native ingrained experience where it's not like, right now those are very different things. You look at an exchange; those are just different assets, and they trade against each other and all those things. But having that a little bit more of a unified experience and kind of like a consumer wallet, I think is where we're headed. I'm really excited to see that.
So you mentioned invoicing, and I think a lot of the conversation thus far and a lot of the conversation around payments in general focuses on retail payments. But when you start expanding that to B2B payments, what are the other things that businesses struggle with? And set all the nitty-gritty tax and regulatory stuff to the side. There's an operational element. And let me maybe share a brief example. We've done some work with a very large Fortune 50 company that has explored accepting stable coins for a certain business line. And when they started looking at this, their treasury team immediately, red flags going up all over the place. And what are the things that concern them? Well, this is a large company that has well-established, decades-old payment processes in place. We generate invoices, they go through a certain, payment system, payments are routed in a certain way, like it's a well-oiled machine. Well, all of a sudden, you introduce Web3 capabilities and you introduce blockchain-based payments, and whether it's a stable coin or Bitcoin, what do they start worrying about? Well, they worry about how do we generate an invoice that is denominated in a different currency. That doesn't seem that difficult to do. How do you accept payment? Well, now you have to have rails. You have to have a partner, a liquidity partner that you can actually accept payments into. And then their treasury team starts saying, well, I've got to do all my normal reconciliations. I'm used to sending an invoice for 1,000 USD. I see it hit my bank account and I match those things up. Well, now I'm going to invoice in, maybe it's a stable coin, but maybe it's not a stable coin. Maybe it's Bitcoin or whatever crypto asset. I've got to be able to reconcile what was invoiced, what was received into my liquidity partner. Do I hold it or did I convert it into fiat? When I converted it into fiat, does it still reconcile to the original invoice, or was there some slippage in there? And then when I remit it back to my bank, did I actually receive dollars in my bank that reconcile to the fiat was converted, that reconciles to the digital asset that was received, that reconciles to the invoice that was originally generated? So you actually complicate that process quite considerably, where it's not just one reconciliation, did invoice match payment into my bank? It's actually a series of reconciliations. So operational teams are grappling with that, and they're saying, how do I streamline it? I've got to get to the ability to accept and scale these payment mechanisms. Can I automate those reconciliations? Can I make it happen instantaneously? Can I combine it together, whether it's on Lightning Network or something else? Can I collapse and condense that process? These are the things that like big enterprise adopters are starting to grapple with so that they can then open up the floodgates to payments at scale. We're not quite there yet, but there's a lot of innovation that's happening to be able to enable that level of scale.
I was just gonna say I agree, and I think that's where we need someone like a MicroStrategy on the payment side. Like MicroStrategy kind of led the way on the treasury side of things. Of like, there's no rule book for this at all. We're gonna do it. We're gonna figure it out as we go, and then hopefully share some of that with the greater community. I think something similar on like kind of the treasury management side for accepting it on invoices, accounts payable, any of those things. Would be great, and I think that we need some people that are forward thinkers to really say this is a challenging problem, but we want to go tackle it because it can save us millions of dollars in the long term or increase efficiency, whatever it is. And so I think that will be exciting to see as more and more people come into the space that are willing to innovate.
So what's the driver for this company that we've worked with? They think about, well, if I can reduce the time to collect, and you multiply that by thousands of payments that are B2B payments, so we're talking lower volume, but higher quantity, the payment amounts are much larger. If you can incentivize your partners where you can collect in a shorter period of time, all of a sudden you actually have very material dollars that you're keeping in your own pocket. So it does. It takes like who's the leader in the payment space to really push the narrative forward.
Yeah, and that's what we have a customer called Zagotta, and they're basically doing that on the mining side with their energy suppliers. So normally miners have to put up large amounts of collateral with the electricity company, and then they charge them bill monthly cycles with like net 60 payment terms. What they're doing is they're using Lightning and they're paying their electricity bills with Bitcoin over Lightning daily. So that basically the speed of payment and settling those at a much faster frequency lets them post less collateral because there's just less outstanding balances, and so no one likes to have collateral sitting there. It's kind of it's a way of life. We just kind of got to accept it. But people don't like that, and the more that they can reduce that collateral requirements, energy companies are happier, mining companies are happier. So it's I think that's one of the biggest efficiencies is being able to submit payments at a much higher frequency. We're doing that on this in automating that process where normally doing that invoice for a month with net 60 payment terms is just bringing that settlement time much faster is really interesting, and I think it's something that would allow a lot of companies to have much better efficiencies just in their operations.
Yeah, I think that's a great point. So the monetary efficiencies, the operational efficiencies, somebody has to gain something, right, in order to adopt it at the end of the day. And I think hearing that use case is actually very helpful, right? Because I feel like a lot of this part of this issue too is people don't understand or hear about the use cases. They don't know the real life application, right? That's just education, right? That's just raising awareness and doing all of those kind of efforts, right? And so I guess let's go back to you, Graham. Like your company, how are you trying to like push messages out, like letting people know that this is how enterprises are using, this infrastructure, and yeah, just that kind of the story behind it.
Yeah, I mean, I think it's just a lot of education. So we did a report with Fidelity earlier this year that really kind of highlighted how is the Lightning Network being used, like just kind of payments on Bitcoin. What's the current status? What do we see going forward? Because that's as more and more payments are getting pushed onto Lightning, the way that the Lightning Network is created is it's very a private network. There's not public metrics like with Bitcoin on chain. Public ledger, everyone can see every single payment. They know how much value is being transferred, all of those things. With Lightning, it's entirely private. The only people that know the volumes are the sender and the receiver. So there's not there's not a public data source where you can just see all the volume. And so that's something that has been, I think, challenging is people to get their heads around. And so that's something we've been pushing a lot of just trying to uncover a lot of those metrics and just get them into the minds of people. And just really highlight what can be done with using Bitcoin and Lightning specifically as a means of payment, which is really reducing that. Even if you're just moving Bitcoin on chain, whether it's with a liquidity partner, deposit withdraws out on exchange, any of those things, you can save millions of dollars a year just by moving it onto Lightning because of how much cheaper it is. And so just highlighting that, of just making sure people understand what can be gained by just you're moving Bitcoin all the same. You're just doing it with this other method, and just being able to highlight that efficiency. So it's really just showcasing what is being done today, and then what is possible for you and your own business.
So I think Bitcoin as a payment rail is kind of getting lost in the noise of the Bitcoin treasury play right now, right? And granted, I mean, we're a Bitcoin treasury company, or rather I should rephrase this. We're a company that leverages Bitcoin as our primary treasury reserve asset. We are not a Bitcoin treasury company, and I think there's a unique distinction between those two. You have the Michael Saylors of the world that are accumulating Bitcoin for the sake of accumulating Bitcoin, and they're doing the clever financial engineering with the converts, and that works, clearly. So how we use it is we actually use Bitcoins for payments to a lot of the funds that we invest in. They accept Bitcoin in kind, and we redeem assets out of those funds in Bitcoin as well. So Bitcoin is a treasury reserve asset for us. And while I don't want to say the Bitcoin treasury companies are kind of doing a disservice for Bitcoin as a actual payment rail, they kind of are, because even the Bitcoin for Corporations group, which the BTC Mag guys run, and we're a huge proponent of it, and we're one of the founding members of Bitcoin for Corporations, everything is about Bitcoin treasury, not actually using Bitcoin for payments. Now, I think gentlemen like this are obviously pushing very heavy for having Bitcoin payment infrastructural rails, and I think that we're going to see that in the near future. But it's kind of getting lost in the noise, both from a adoption perspective and from an education perspective, because a lot of the education material that's being put out right now is exclusively focusing on buying and accumulating Bitcoin. We need to change that conversation in the mainstream, or else we're never going to really see Bitcoin adopted as a payment infrastructure.
Yeah, I totally agree, and I think that the other side of that too is the strategic Bitcoin reserve, where that's all about just investing in Bitcoin and just having it, And so I think that there is a lot about that, and I think that it's one of the really unique things about Bitcoin is it can really solve both of the store of value as well as the payment side, where fiat is very good on the kind of the transactional side, but it's not very good for the store of value. Same thing with gold is like relatively an okay store of value, but it's not good on the transaction side. So there's really nothing that's like Bitcoin that can kind of do both and do both well. And so that's something that's just new. We got to really figure out how do we kind of build both sides of this, because that's the value prop of Bitcoin is both. And just communicating that is really challenging.
And I think one of the biggest issues is that, I mean, if you look at Bitcoin and you look at what its real value drivers are, we've really owned in on the digital gold, the digital store of value from a mainstream marketing perspective over the last nearly decade, I would say at this point. And the truth is that's one of the value drivers of Bitcoin, sure, but at the end of the day, it's only a small piece of what Bitcoin is. Bitcoin is the world's most perfect money, full stop. And it seems as though as a community, we've kind of forgotten that, where we look at Bitcoin as purely an investment. We look at Bitcoin as purely that store of value, and we're completely neglecting what it actually truly is, which is the world's most perfect money.
I kind of think it comes back to one thing that you said towards the beginning, Graham, which was putting stable coins on Bitcoin. Yeah. Because when you have, the president saying the first rule of Bitcoin is don't sell your Bitcoin. Or when you have Michael Saylor saying sell your kidney, not your Bitcoin, right? That doesn't promote payments, right? It promotes hodling. So I think getting stable coins on Bitcoin is a really powerful way to promote it.
Yeah. So I guess, what are your thoughts on, let's say, nearish term, 5 years from now, how far we get, we talked about regulation being a hurdle, education being a hurdle, right? So what does it look like 5 years from now? Do you think we make enough progress, and then 10 years from now it's even better? What does that timeline kind of look like to you guys, if that makes sense?
We're all looking at Bobby.
Yeah. I have the answer. It's I say 10 years, yes. 5 years, partially. Again, I do think there's this, black hole kind of gravity towards a situation where a more perfect, currency or monetary system is just inevitable. And in order for the trust factor to play out, there has to be utility around it. So time frame is really difficult to talk about. 5 years, I think, not yet, but 10 years for sure.
For me, I look back 5 years. And so 5 years ago, I was not in this industry. 5 years ago, I spent a lot of time working with corporate treasurers and was hearing them start to ask questions like, what is Bitcoin? Should we have it on our books? Should we have an allocation to it? So going back 5 years to where we are today, if that pace continues, and if the derivative of that pace, the acceleration continues, whether it's 5 or 10 doesn't really matter that much, but I think it's going to be exciting to see where it's going and what happens. I personally, in the payments arena, am most excited about stablecoins right now. Companies are paying attention to stablecoins because I can essentially instantaneously, for essentially zero cost, move assets from where I'm at to anywhere in the world to fund my business operations. That has been a huge challenge for international conglomerates for a very long time. It's been expensive. It takes a very long time. If I am paying my employees in South America, I've got to make sure that I hit this arbitrary deadline days in advance, and it just doesn't make a lot of sense. So that personally is what I'm most excited about right now in this moment, and I think stablecoins is fundamentally changing that game. I think it will spill over. How long that will take, who knows?
So I couldn't agree more. So I'm one of the founding investors, and I sit on a board of a project called Plasma. It's a Bitcoin sidechain that is exclusively optimized for stablecoins that's actually backed by Tether as well. So I do think that we're starting to see the technological solutions, for instance, like a Plasma, like a Lightning, that are really bringing stablecoin infrastructure to the Bitcoin space. And I do think that that is where we're going to see the first level of Bitcoin payment adoption. Now, we in the West really kind of have this idea of stablecoins being stable. They're actually really not at the end of the day. I view Bitcoin as being stable, and fiat is just highly volatile relative to Bitcoin. I know counterparts on my panel probably disagree with me in that assessment, but like I said, I view Bitcoin as the world's most perfect money. Now, with that said, does Bitcoin as money make sense for everybody on Earth? Well, I do think in the West it does, because we have seen the impacts of inflation and, frankly, what I believe is our government intentionally devaluing the dollar over time. But does somebody in Venezuela, does somebody in El Salvador, do they really need Bitcoin, or does the US dollar-backed stablecoin actually solve a lot of their issues? The truth is it does. These are individuals that have hyperinflation, mass inflation that we don't necessarily experience in the West, or at least we haven't experienced for the last 40 or 50 years. So for these individuals in emerging economies and in third world countries, the stable coins actually make much more sense. And this helps create a more financially inclusive ecosystem, because if you're an individual in Kenya, you might prefer having US dollars than your own local currency. And it's unfortunate because pushing stablecoins does effectively increase the US dollar hedge money around the world. And I'm an American, so okay, fine, I guess I want that to happen. But at the same time, I also want to see Bitcoin become the major currency. I think this will happen over the next 5 years on the stablecoin side and stablecoins secured by Bitcoin. But I do think I'm more aligned with him that it's probably going to be more like a 10-year project until we see Bitcoin itself as that payment infrastructure.
Yeah, I mean, I don't know if I have any new exact timelines, but I mean, I definitely agree with you on the acceleration. I mean, I think that we've definitely seen, I think things just keep getting faster and faster. When I started using Bitcoin in 2012, really the only way of using Bitcoin was to download Bitcoin Core, let it sync on your laptop, which took several days, and then you'd get your addresses and then put them into the faucet where you get 5 free Bitcoin off the website. Those are the good days. But I mean, and now where we see all of the infrastructure that's being built around exchanges and the wallets and like all of these things, that's quite a long time. But I think that we're starting to see just more and more innovation happening faster and faster. And so I don't have a timeline, but I do think that it's exciting to see the pace of innovation continuing to be kept up. And then I think that we're entering a new phase where, as we look at more regulation and just kind of getting better kind of structure around the whole thing, that's going to be really exciting, because it seems like every time we get some pace built up, something happens, like Luna crashing, that stable coin, and then FTX, and it's like, man, that really took the wind out of our sails for a while there. And so hopefully we can keep up the pace of innovation without the falls. I think price will always be volatile, but like the big market setbacks. Hopefully we can over time decrease those, which only increases pace of innovation. So I'm excited for the next 5-10 years to come.
Great. Thank you very much, all of you.
Oh,
it was
you.
a pleasure. And thanks,
Thanks.
everyone.
Thanks, guys.